Welcome to TradeTheMBI.com. This is John. This report is for the 12th. And, well, we had the beginning, early part of the week here where we dipped down to the ABM, which is something that we knew we expected because we were getting a little bit too far away from it, and it tends to call itself back, even though we were still noticing continuation of the rising shakeout, particularly above our yellow line, and it's still in place. We saw a new zone breakout from DOC red, which is long-term buyers, as well as even short-term buyers. Is it excessive? Sure. To the top, but look at that short. I mean, every time, this is a simple call. Cyan below red is always bullish, except for when we get the little steal. We expected a tiny bit of weakness. We got the tiny bit of weakness, wasn't much, and then sure enough, now shorts moving back a little bit, but so overdone, they're not even near the zero yet, so the potential for this to continue. Now, looking at the extremes, yes, all of this is going to get filled back in. Just not yet. You have to wait for the algos to be done with their buy setup and see if they can attract enough people to carry it through. Certainly, even from a volatility standpoint, it's a fairly decent two-day move because we had that significant decline and then move straight back up. It's pretty decent. A little bit weaker from a NASDAQ point of view. It's already getting close to a potential cross, and already had the weak point of it, but short-term buyers back into it from being reset. A little more active on shorts on the NASDAQ, so we can see that the NASDAQ will probably lead a move lower. Huge move from the euro with the expectation of the US just not representing any inflation yet, but I think that there's no question that that's going to be the case. I think that there's this belief that somehow Europe is stronger, but I can tell you that it is not the case at this particular point. But that doesn't necessarily mean that things aren't going to get driven. I know the whole treasury thing with the Chinese spooked a lot of people, but then you had this massive auction the other day, and that was a huge bonus, and so that's also contributing to the euro push. USO, now oil again. Now this is big because this pressure of price is going to have its impact. It takes months. But when it starts to happen, it gets in a situation where it's a little bit out of control. And while I believe that the market thinks that there's this massive capability to turn the spigot on, to a degree, when you have growth that's outweighing demand, even if your ability to ramp up production is not necessarily going to fill that void, and that will create some price disturbances, which are going to lead to I think some difficult periods in the market here in the second quarter. So it's definitely something to be noteful of. You can see that this is way out of range here. 35 for a reading from the shakeout. It's whoa. But still clear all the way with this cyan. It's just way down there. But when it starts to fill back, it's going to do it quickly. And this hasn't been that much of a rise for this extreme measure. So when it does come back, it's going to be swift, and doesn't mean that it's going to be systemic. It just means that we're moving into a period where that stabilization also going to increase profits for a lot of those Midwestern states, southern states too, and that will be a boon for them as well. Gold, it's going to keep peaking. There's just no question now that even with the increased amount of labor being sucked up, at some point it's going to reach a threshold that's going to drive inflation. No question about it. And here it was. There's nothing to even talk about. I mean, it was just a straight uphill line, complete resets every time we peaked out with the orange getting to the top. All you had was just small retraces that reset everything and started right back up again. And then you had most of the day with the cyan under red. We ended up with a brief little DOC right there on the reset, but didn't take long before turned around, just a couple of bars. And you're already at the highs anyway, so at that particular point, it really doesn't make much of a difference. But cyan under red the whole time. We ended up with a tiny little break of that right about here, but again, full reset of the steel, and then boom, it popped up right from there. So all in all, if you're just playing off ABM, this wasn't even a factor. And if you were using, as I like to once we get into a trend move, using the Fibonacci levels, also it would have just been nothing to do, and there really was nothing to do. So, long and short of it, thought I'd throw this up to show an interesting thing, because the liquidity for Bitcoin futures kind of dried up. We had these very normalized setups here within a 15-minute, and then you can see how thin the trades are going to be when it comes to time. And like I've said to you before, I can't even do a tick because it doesn't show up, and it's just an indication of easily whipsawed movement, because just not enough activity. A lot of hype, not a lot of action. So bear that in mind when you're trying to think about some of those things. As always, though, trade well, and I will post anything that is relevant when it pops up.